Este es pa' que te enteres, este es el detalle. Si caliente está la cera, más caliente está la calle.
Mira, llegó el son cubano.
Hola mi gente, and welcome back to another video from the We Are Investing channel, a channel that is dedicated in investing and personal finance. And today we got a show, and that's why I'm chowing down on some popcorn. We're going to be talking about AMC stock, which I'm a fan of. I'm a huge fan. I'm a fanboy of AMC. And we're also going to be talking about GameStop stock, or GameStop stock, or GME stock. We're going to talk about AMC and GME on this video. So stay tuned and get your popcorn ready. Now, with that being said, before we dive any further, please consider hitting that subscribe button, ringing that bell if you haven't already, so YouTube notifies you whenever I make another video, so that you can stay in tune with the stock market. And smack, do whatever you got to do to turn that like button blue. It really helps with their channel growth, and I really do appreciate it. And please be aware that there is a Patreon for this channel that gives you access to a Discord server of over 400 members, gives you early access to videos, and also allows you to follow the portfolio in real time. Whenever I open or close a position, I post on the Patreon. Now, both GameStop stock, GME, and AMC, I'm just going to call it GME for this video because it's much easier, are both going berserk right now. We got crazy returns. But I can't say that GameStop is worth $200 a share without smirking, because it's just not true. Fundamentally, GameStop is not worth that value today. Potentially, maybe, but it's just too much speculation, too much growth being built into the stock to say that it's worth $200 a share. AMC, on the other hand, $11 a share isn't crazy. There are fundamental reasons to believe that AMC deserves a better valuation. That's why I have call options with the $8 and $10 strike price for this stock that expire in January. I mean, honestly, I think AMC hasn't moved the way it should because it had such high short interest and is against Wall Street. That has somewhat been reduced. A lot of shorts have exited AMC. It is still a decent short interest at around 30%, don't get me wrong, but it's nowhere where it was before. So that is no longer in play with AMC. And also GameStop, the short interest has been reduced a ton as well there. And also with AMC, it's getting lumped into these Wall Street bet stocks, which really isn't good for investors. They don't want to invest in these kinds of companies because they are extremely volatile. But if AMC was to be classified as a reopening trade, a reopening stock like it should, the stock price should be up much higher. Take a look at some of the other reopening trades. You have the hotels, they are up a ton, including Airbnb, which is up massive since its IPO, and today, before its first earnings, is also up a ton. You have the cruise lines, which as a business is really hurting, just like movie theaters, but they are not getting the same treatment. They are up a ton as well. And then you have companies like Boeing. They make airplanes. People are not flying like they did before. And Boeing has a ton of bad news. However, the share just goes up and up and up, which is actually quite interesting. And it could be a trade, a potential trade. Because if you have a stock that goes up off of bad news, imagine what the stock would do off of good news. So definitely add Boeing to your watch list. Whether you like the company or not, you have to understand, you have to see that a stock going up off of bad news means that there is a lot of potential in the stock still. But my point I'm trying to make is that this company, AMC, which has a market cap of around $3 billion, had revenues of around $5 billion in 2019. We have a bunch of movies that are going to be released as soon as we reopen the economy. AMC theaters are starting to reopen in multiple states. There is a case to be made that this is a reopening trade. The stock value is depressed because of other factors, and also from what happened with the stock before. AMC took advantage of it. They were able to raise capital, and they don't have to fight with bankruptcy for the time being. So all of those factors combined, all of those factors make me believe that AMC at $10 a share isn't ludicrous, and we could see a higher share price just off of valuations, just off of the reopening trade. There are legit reasons for AMC stock to increase in value. But what's happening right now is not based off of fundamentals. It's based off of a trade. It's based off of Wall Street bets and maybe some other factors that I do not know. I will say that sometimes these hedge funds battle it out with each other, and that's what we could be seeing in these high short interest stocks. Other hedge funds would like the other hedge funds, the ones that are shorting these stocks, to fail because that's wiping out competition. It's much easier to get money from an accredited investor when you say my returns are X amount and his returns, well, they were negative because they shorted GameStop, AMC, and they got crushed, while we, on the other hand, were on the opposite side of that trade and we made a ton of money. So which hedge fund would you like to invest in? The choice is easy, and sometimes that happens with hedge funds. It happened with Carl Icahn and Bill Ackman over Herbalife. Bill Ackman got slaughtered, not because he might have been wrong in his thesis about the company Herbalife, but because another hedge fund, multiple hedge funds, saw an opportunity to squeeze out competition and make money doing it, and that's exactly what happened. But Bill Ackman survived as a hedge fund manager. He did not do good with Herbalife, but he's been really good on some other trades, so he is okay. But I think you understand the point I'm trying to say here is that sometimes hedge funds battle it out with each other, and that's something we could be seeing here. In addition, we could see more retail investors buying the stock. I will say that there is an extra level of pressure on the downside this time around because we are below those prior highs. There are a lot of bag holders that if the stock does increase in value, they'll look to sell. So if we do have higher highs or we get much higher in the share price of either GME or AMC, that is going to be more impressive. Now, talking about the stock price for AMC right now and looking at the charts, we can see that we broke through a $10 resistance, which is huge. And we could potentially gap up. I mean, technicals, looking at the chart, we didn't really trade anywhere between $10 to $20 a share. So there's no reason to believe that we would settle somewhere in between there. But just based off of technicals, we could gap up to over $20 a share, which would be extremely crazy for AMC stock. But let's see what happens here, guys. That wraps up for this video. I am super excited to see what's going to happen here. I am still holding my AMC shares. I'm just going to sit back and relax and let the markets do its thing. If all of this fiasco starts to drive down the general markets, I'm going to be happy about that because I got stocks that I want to buy. I want to buy them for cheaper than they are today. I want to go shopping for some deals. So if the entire market starts to freak out about this volatility, that's good for us, guys. But that wraps it up for this video, guys. You know the deal. Hit that subscribe button, ring that bell, and smash that like button. Follow me on Twitter, join the Facebook group, and there's also 2 promotional links to Webull down below where you can get 2 free stocks worth up to $1,600. And most importantly, join the community, join the Discord of over 400 members by joining the Patreon. A link is also provided down below. You know the deal. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together, we are invincible. See ya!